This financial literacy, which is only increasing with every passing year. More and more people are investing today in mutual funds than ever before. More and more people are investing in SIPs than ever before. We're talking for them who are watching this. They've just been told, they've just gained this wisdom over the last few years, especially in the post-pandemic scenario, that it's important that we have SIPs. It's important that a huge chunk of our investments are going into SIPs. And then comes this surprise, and the numbers really make you think. Even me. I'm asking my investment advisor, is it time to park a portion of my portfolio into just gold or gold ETFs or something like that and just move away from just a heavily mutual fund dominated portfolio? What do you think should be the strategy for the year 2026?
Yes, according to me, as we know that gold has given exponential returns in the last 1 year, but it doesn't mean that it will, in the history will keep on repeating. Yes, it may give, because my analysis say that for the next maybe 1 month or more, gold may come down a bit. Okay, and even equity market may come down a bit in a form of correction.
Okay.
But after that, in a whole year, if we consider in 2026, according to me, equity market should try to give some good returns, because from since October 2024 till date, equity market has not given that much of a return. So we are expecting something good. And as we see that gold and equity goes opposite, right? If the equity market is going up most of the times, not every time, but most of the times, if equity market is going up, then the gold market goes down. Gold and silver market goes down.
Yeah.
It's in an opposite direction, right? So according to me, even though we have seen that a lot of returns have been given by the gold, but I want to say one thing, that it's a thumb rule that if you are investing in gold, it's just a kind of hedging to the inflation, hedging to the economy or equity market, you can say, right? So in a part of hedging, it's a thumb rule that maximum 5 to 8% should get invested into gold. Yes, if people are thinking right that gold may give better returns, then you can park more, maybe say 10 or 15%, but not more than that, because whenever you are saying about the investment, we should not keep the horizon of 1 year, but it should be at least 3, 4, 5 years of horizon, because more the time you invest, better returns you give. And according to me, sir, that in equities, over the period of time, even though the broader indices, Nifty and Sensex, have not given us better returns, but those people who have proper knowledge about equities or maybe about mutual fund and SIPs, right, they can invest into if they have proper risk potential, right, they are able to take the proper calculated risk, then they can invest into SIPs, or else they can park their money safely towards gold, because it is being seen that over the period of time, even though gold may or may not give that much of returns, but it's a kind of bit of safe investments, and over the period of time it will keep on giving you better returns, because it's directly linked with the
I was asked this question because you're talking about 1 year horizon. Even in the last 5 years, if you see, gold and silver has given better returns than the Nifty 50.